the middle of the day. Good after morning, someone once told me, when it's right between noon and afternoon. Good after morning. Mike and Corey today with the show. We're going to talk about 3 exciting topics. The 10-year bond, and that's up, and how that impacts you. General Motors earnings, which were really good, and then brackets. And when I say brackets, I know you're thinking NCAA brackets. It's way too early. March Madness is still. It's the other kind of brackets, tax brackets. Corey's going to dive into those being released for 2025. But before we get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything heard in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I'll take the first exciting topic, which is a 10-year bond. And the 10-year bond is the one that most closely ties to mortgage rates. So when I was looking to buy houses and I was watching the interest rate, I'm watching the 10-year bond. And unfortunately, for those that are financing or refinancing, it has went up lately as far as the yield, which means the cost of borrowing has went up as well. Certainly the expectation was that as the Fed lowers the interest rates, this thing would start to come down. Initially it did, and then it's kind of reverted back to where it was a few months ago. One of the main reasons why, concerns after the election, November 5th, coming right up, that there's a potential for more deficit spending. Wow. I didn't know that was a new concern. I thought that was always a concern. So anyways, that is one concern from that. But really, what's the impact? And here, I'll show you the graph. Here, let me show you this graph because it's, I'll call it kind of ugly. If you are a borrower, if you want to borrow money for your mortgage, you want this thing to go down. And you can see this is a 3-month graph, and it kind of hit down the bottom right as September 18th, I think, is about when the Fed made the announcement on the interest rates. And then look what it's done since then. It's tracked all the way back to where it was back in August. Now, if we reel this back and we look at a 1 year, you can see it's still come down. And of course, when I go all, you could see this drop over the last 10 years when we had the super low interest rates and people were getting 3% mortgage rates. We want this to go down, which will cause our bond funds to go up in value. That's one impact. And you may notice if you've seen a VCLT in your portfolio or in our models, they've went down a little bit in value, which is surprising, but it's really just related to this rate. So, we'll continue to track this, but we really want this below 4%. It's at 4.21 now. On a good side, let me give you some good news. General Motors came out with earnings and they easily topped Wall Street's third quarter expectations. Now, whether Wall Street expected too little and they out jumped a low bar, we don't really know, but the market knows, and the market says that is good news. So the stock is up almost 10%. What I'm showing you here is a graph back to the time when General Motors came out of bankruptcy. General Motors has been around for 100 years but their stock that we can look at is only back to 2011 because they went bankrupt in 2008, 9, somewhere in there. But you can see since then, the last year and a half, 2 years, they've done pretty well. They've almost reached their 2021 peak. But when we look at General Motors, it's once again, this country is driven by consumer spending. If General Motors is doing good, if Walmart's doing good, if Amazon's doing good, the consumer is spending money. And certainly General Motors is a lot bigger than just automotive. There's parts suppliers that feed into General Motors. There's employees within General Motors. So, just kind of a good, keep your finger on the pulse of the economy. That's going well. So with that, I will turn it over to Corey, and he will talk about the exciting type of brackets that he loves to cover.
Yeah, this morning we got the federal tax brackets for 2025. So a couple of highlights there. the 2025 brackets. We'll look at that in just a second. The standard deduction increasing to 30,000, and then there are some other changes to consider. But just for the tax brackets, looks like we got about a 3% increase at each tax rate level. So for that 10% tax bracket, you went up about 3%. And then you've got the married couples filing jointly category right there, the larger number. So, if you're one of those people who tries to defer income or limit their taxable income, you now actually have a target to start planning for next year. So just wanted to put that out there. What do you think, Mike? Are you?
Yeah, well, 3% increase. The cost of living 2.5%, so 3%. That seems right in line with the expectation. Probably the other part. Leave your screen up there at the bottom where it says after 2025. This will be a big thing that comes out of the election. So the new president, whoever that is, will be dealing with the sunset of I think they call this one the Trump tax cuts. Get credit like that. But if that is sunsetted, then the tax brackets will go up. Not the lowest one. You can see 10% stays the same, but everyone else goes up about 3% in taxes. So this will be a big congressional battle with the president to say, hey, nobody likes to raise taxes, and if they let this expire, essentially that's what they're doing, is raising taxes. So we will definitely be talking about that in the new year, I'm sure, as well as I'm sure you'll hear it all over the news channels too. So tax brackets, not exciting things to think about, but when it comes into February through April, collect all your documents, get all your taxes filed. Very, very important for either yourself or your accountant. So that's what I think about it. I'd much rather be looking at the NCAA March Madness brackets myself.
Well, yeah, I'm sure we'll do that again this year.
Awesome. Well, thanks everybody. We will have another show tomorrow. Have a good one. Bye.